Okay, so let's start by having a look at what a broker really does. A broker sits down with a family and goes through a process called a fact find, which is like a structured questionnaire. And that fact find information enables us all to see which direction maybe would be best for that client's circumstances. And we're able to make then some choices from, or analyze the options from hundreds of different loans from a panel of over 30 banks and lenders, including all of the majors. And we're able then to furnish the client with a written report as to our findings. And in most cases, well, in all cases, we get paid by the banks and lenders, so we don't need to charge our client any money for this. So it's a total free service to help our client navigate through their options. And the appealing thing about our industry is that you can start initially part-time. You can work from home, which is pretty exciting. Work your own hours, so you can juggle a family or run other businesses at the same time. You need no experience. We have a very comprehensive training program for newbies coming into the industry. In our system, we don't charge any franchise fee or any major joining fees, and the mentoring that you're provided is free of charge to you. And what we try and do in our training and teachings and in our value proposition is to make you stand out a little bit from the pack, because what we described a mortgage broker does is what most mortgage brokers do. And how we help you differentiate a little is not only do you have access to a panel of normal 30 banks and lenders and so on like everybody else, but we also orbit around your business key professionals in other areas, enabling your business to also talk and work with scenarios that require non-conforming loans. They're loans that the banks won't touch. Commercial loans, pubs, offices and so on. Private, even wholesale funding you'll have access to. Invoice funding. Self-managed superannuation fund solutions, one of the hottest subjects in financial services today. Auto and equipment financing, including, think about this, being able to offer car loans and equipment loans up to $100,000 with no financials and same-day approval. So that's a bit of a standout. In nearly all the cases of these extra services, you'll be just simply what we call tick and flick or spot and refer, but you'll be passing it on to the experts who've got all the experience to handle these loans, and you'll be paid a significant referral fee of even up to 50%. So imagine a $5 million pub deal that generates 1% in fees and commissions. That's $50,000, and you can get half of that for identifying the opportunity. We're going to get involved heavily in training and teaching you the different proven ways of growing your business and getting clients and marketing yourself and being out there. Some of the standard areas of training that we're involved with is online. It's a very popular method of training these days. And in our webinars, we include after hours opportunities, because we understand that some of you will be starting very part-time. And also on demand, so when you have half a day here and there, you can click the button and watch stuff and learn on call, so middle of the night if you want to. You'll also have a dedicated mentor associated with you, and we'd be looking very hard at how to identify the best niche for you, the best area of comfort. We can then get you involved and do a one-on-one business plan with you, and over a cup of coffee and so on. And because, listen, we don't charge any franchise fees or whatever, we only succeed when you succeed. So training is a very important part of our business model. An appropriate thing to help you understand the opportunity is to drill into a case study of a broker. And in this case study, we're talking about a qualified broker, somebody authorized to write loans and give advice. And between now, when you first start out, and then, there are some hoops to jump through and some things you need to do and some experience you need to gather before that happens. I'll comfort you and say that from the very beginning and from the outset, you'll still be able to earn some really good money before you're fully qualified, so you can start generating commissions straight away in your business. Okay, so in a normal case study, look, from a normal bank and lender, upfront commissions that are paid in the order of like 0.5% to 0.7%, which means that on a typical $400,000 loan, the lenders pay in the order of $2,000 to $2,800. We'll keep it conservative and round figures and call it like $2,000 upfront commissions on a normal loan. Okay. In addition to that, most lenders pay a trailing commission, and it varies widely from 0.12 to 0.25, meaning that that very same loan can generate further incomes of $480 a year or $40 a month to $1,000 a year. We'll keep it really simple and round figures again and call it $500. Okay, so that's the typical loan, typical lender, typical prime sort of situation. Okay, and before we launch into actual numbers, I want to show you something. Look at this thing on the right hand side, the sales professionals, accountants, tax agents. Look, one of the most proven ways of success as a broker is for you to form strategic relationships and partnerships. We call them referral partnerships. These are people who are out in the marketplace dealing with people who need money. Real estate agents, salespeople, even accountants, tax agents, these people need money. Also, there are businesses out there, plenty of them, website owners and people who own databases who are looking at other ways of monetizing their asset. So what I'm going to suggest to you is going to be a little controversial, but I'm mindful, and you should be too, that there's a bit of a brick wall ahead of you and success that we need to break through. We need to get some traction. It's okay for mortgage brokers with 10 years experience and a good database to say, oh no, I would never give any of my money away for a referral. But you're brand new, so how are we going to get you started? How are we going to get some traction in your business? So I'm going to suggest something very controversial, and this is not a recommendation. I'm just posing something to you and work with that. Here we go. Okay. If, now think about this. If you're prepared to offer 50-50 of your commissions, your upfront commissions, to a third party, like these ones here on the right. Think about this, 50-50. You do all the work, right? They're just passing you to a client who needs money anyway. Do you think you'd get some takers? Now, we normally do a poll at this stage, but over the time, the poll has been 99.9% people say, well, of course. There's no way you wouldn't get takers offering 50-50. Again, I remind you, I'm not advocating do it. I'm just saying, if you were to, would you get takers? Well, let's see what happens if that's how you started your business, right? Just to get some traction. You formed some relationships. We've got all the tools. We'll show you how to do it. You formed a couple of referral partnerships that culminated in you writing one loan per week. So they sent clients to you. You sat down, followed the model, and you got one client a week, okay? Now, one client a week, by the way, is very part-time. You could probably do that in 5 hours maximum. And this chart assumes that you have indeed offered 50, or you're paying 50% of your money to these referral partners. Okay, on this one loan a week, remember $2,000 per loan, one a week, 50 weeks, $100,000 in gross commissions. 50% of that is yours. 50% goes to your partners. So for that 5 hours, 10 hours, that very part-time effort where all the clients are coming to you by these partners, you're going to earn $50,000 a year. And for many of you, that's life-changing as an add-on to your existing business. Now, let's go one step further. 1 year into your business, and you're writing now one a week, that's 50 weeks, 50 loans now. Remember, these loans generate a passive residual trailing commission of $500, 50 of them, $500, $25,000. When you add that to your upfronts, then you have now $75,000. And remember this, your loan book is growing at 50 loans a year, 50 loans, another 50 loans and 50 loans, and so on. And it starts to grow very handsomely. You've still never written more than one loan in a week, remember that. And if you want more money than that, write 2, write 3. You'll meet people who do 5. In addition to this, you can't help but get referrals from these clients to their friends and family, and those referrals don't often have any payment attached to them. They're just a courtesy referral. So the whole $2,000 then goes into your account. You'll also bump into people who are looking for loans, self-generated, meeting people at events and barbecues and so on. And don't forget this too, you've differentiated your business by having access to all sorts of other things too, so that you'll get fantastic referral fees. Some people get more referral fees on these other products and services than they actually earn as a broker. So, hey, one of the really, really exciting things about our industry, one of the attractions of our industry is that not only are you building an income stream, you're actually building a sellable asset for yourself. I'm going to do a little exercise in mathematics. I want to highlight something to you, and hopefully I explain it nice and clear. This is mathematics, okay? So if you're writing one loan a week for the next, say, 5 years, follow this with me. So it's one loan a week, 50 weeks, 50 loans. $400,000 typical capital city amount times 5 years. Do the math, bang, bang, bang. That adds up to 100 million under management, okay? I'll also point out to you that when you first start, you have fairly unabated growth, loans out on top of other loans, on top of other loans, and so on. But then you'll find a plateauing effect. So even if you're in the business for 25 years and you only ever write one loan a week ever, then you're not going to get past this point, because people repay a loan or sell and refinance, and those trailing commissions then go, right? So it's important that you understand this plateauing effect that kicks in automatically into the system. All right. So, but if you've built this $100 million loan book and you're getting, say, on average 0.15% in trail commissions, that's $150,000, just mathematics, of passive income. Here is an email I get quite regularly, being in industry, from a company I'm not involved with at all, but they are saying here that they'll pay 3 times for your trail book. 3 times, but 3 times what? 3 times, ready? This. That's what they buy. They buy your income stream. Now I thought, okay, all right, so you've built this, one loan a week, you're in the business for 7 years, 8 years, you've built $100 million, it plateaus at that, and you're getting $150,000 a year, times 3, well, that would indicate that your business now is worth in the order of $450,000. Now, I thought I'd do some research and just test that, and forgive the quality, but here's an actual ad I did on an iPhone. Look at this. This is an ad, $100 million. We talk about your size business. Here's one for sale, $97 million, or, so call it $100 million. Look, $433,000 to buy it. Here's one down here, $100 million, 102, $420,000. Here's another one, 106, $480,000. So it sort of indicates that is the sort of number that your business is worth when you get to that. If you feel this opportunity might be suitable to you, how about you fill in the chat box below? We'll start a dialogue. We'll just see where our options are. Let's see if we can build something special together. Have yourself a great day, and hopefully we'll speak very, very soon. Bye-bye.